I'll start with why we're doing the WAM Leaders product. We've had demand from our shareholder base of over 20,000 shareholders in the last 5 years to do two things. Firstly, to launch a global product looking at global equities. That's a medium to longer term target for us as a WAM group, maybe a 2 to 5 year time horizon. And the second thing we had demand for was to do a large cap product. So here we are today to launch it. What WAM Leaders is effectively, someone aptly described it yesterday to me as a baby WAM capital purely focused on the top 200 companies only in Australia. So it's predominantly a long-only product, a bottom-up stock picking approach. Effectively, what we're doing is leveraging the same investment processes that we've had for WAM Capital over 18 years and applying them towards WAM Leaders. That's both our research-driven and our market-driven strategy, which, as you all know, our research-driven strategy is more that longer-term time horizon on stocks, say anywhere from 1 to 10 years, and that market-driven, that short-term trading side of the portfolio. So it'll be a new listed LIC. We're seeking to raise up to 165 million with 165 million of oversubscriptions. As a part of the IPO, our usual style is to include a 1-for-1 free option at the IPO price of $1.10 with an 18-month duration expiring in November of 2017. The fee structure, it's 1% management fee and a 20% performance fee with a high watermark, so we're clawing back any underperformance before we get paid a performance fee. And there's 1.5 stamping fee on the offer as well. In terms of the timeline, the broker firm closes on the 10th of May. General retail offer closes on the 17th of May, an estimated listing date around the 30th of May at this point in time. So in terms of personnel-wise in the team, Jeff Wilson, myself and Matt Haupt are the three co-portfolio managers on the product. Matt Haupt will be the lead portfolio manager on the product. Matt's been a fantastic recruit for us, 6 years now at WAM for him. He came to us from an IWF subsidiary before that in Adelaide, where he ran large cap portfolios for a few years over there, so it's not new to him. We're bulking up the team. We've hired a new analyst, John Abe, who joins us from Credit Suisse. He starts next Monday. He'll be specifically working as an analyst focused on researching those top 200 companies. And we're in the throes of hiring another analyst. I expect to make an offer to someone late next week to help us out both on that small to mid cap side of the thing. So we've had 2 new recruits coming into the team. In terms of stocks that we like that would fit into the portfolio at the moment, stocks like Mayne Pharma, on the back of the IDT comments, we like Mayne Pharma as a top 200 company. We think that exposure to its Dorix product, which they've now got full control of and full sales control of, more importantly, is kicking goals. Also the potential for Tickerson to come through as a new product over the next 12 months. We think that's got good upside towards EBIT contributions over the next 5 years in particular, and a number of products in front of the FDA over the next 12 months, which we expect a result either way on those. So we quite like Mayne Pharma. That would fit into the portfolio. Stocks like TPG would fit in. Vocus we like. Vocus is an interesting one for us at the moment. It's clearly just done the deal with M2. Fantastic deal. Vocus, the infrastructure operator, M2, the owner of the customers, coming together. The synergies are enormous, moving those customers on net, as they say. So we think those synergies will be realised over the medium to longer term and potential upside to what the market's expecting in that side of things. And Jeff Forth, who will run the business as CEO, is a pretty solid operator. He comes in from M2, as you know. So there are a few of the names that we currently like at the moment. In terms of number of stocks in the portfolio, it will be typically 20 to 50 stocks. Average position sizes in the portfolio anywhere from, say, 2 to 5%. We do have the ability to short sell. As you know, for WAM Capital over 18 years, we haven't been big short sellers. I've been with the firm now for 10 years. The largest percentage of the portfolio that we've been short at any one particular point in time is 5%. We typically have to have a really high conviction view on a short position. One example was Sims that worked well for us late last year, where we were short into a profit downgrade in November. So it's quite stock specific. So you'll see it in a fairly highly concentrated portfolio. So the interest we've had so far is very, very strong. We're in the throes of our investor roadshows going around the country at the moment. We're having record attendances in excess of 500 in Sydney and Melbourne. We've got 370 expected this morning here in Brisbane and Adelaide and Perth, breaking records as well. So the interest is very, very strong. We're seeing a lot of shareholders say the shareholders in WAM Capital and both WAM Research that are expensive. They trade at premiums to NTA at around 15% at the moment. People are saying, well, I might sell some shares in WAM Capital or WAM Research at the premium and come in at the NTA on WAM Leaders. So they potentially, and then also get the free option as well. And what you tend to find is with these LICs is with the fixed cost of the offer, it's generally 1.5 to 2 cents. So if we say $1.10 issue price, you're losing 1.5 to 2 cents of your NTA on day one. But typically your option when it lists, and it will be tradable as well, as we should have said earlier, it typically gets around that 3 to 5 cents of time value in it from day one on that 18-month duration. So that's really the quick rundown on WAM Leaders. I'll just quickly give an update on the current three WAM products: WAM Capital, WAM Research and WAM Active. We'll announce to the ASX today our latest NTA updates towards the end of March. We had reasonable months for March. In terms of how the portfolios have been tracking in the last 12 months, we've had a really strong year, outperforming by 25%. We've had some good performers. Smart Group, IPH has been a good stock for us, a good Morgans corporate stock. We've sold out of our exposures in A2 and Blackmores. That's quite topical. We sold out in January, February. We were just a little bit concerned about what the changes to the Chinese regulative changes, I should say, would look like. As I stand here today, no one really knows. A lot of people try and pretend they know. In our opinion, no one knows. And the clear example of that is, for whatever reason, when we sold out of A2 and Blackmores, within 2 hours of that press article being printed, within 2 hours, the CEO of Blackmores and A2 rang up and spoke to me and said, "Oh, Chris, I saw the article. What do you know that we don't know?" And I said, "Hey, we don't know anything around the regulations." It's just that great unknown and overhang on these companies that have had great runs. They're expensive. They're well owned, and that typically has warning signs for us. So really, great companies. We'd love to buy them one day at a much lower price, hopefully. Good management teams, and they tick a lot of the boxes. So, but short term, they're a little bit expensive. But in terms of the dividends for the three, WAM Research went ex-dividend yesterday. WAM goes ex on the 27th of April. We've got really strong dividend visibility with the three LICs at the moment. So WAM Capital's got about 18-month visibility on the dividend. With the profit reserve, WAM Research has got around 3 to 4 years of dividend visibility, so the strongest out of the three. And WAM Active has got about 1 year's visibility on the dividend with current profit reserves as we sit here today.